Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with stocks, and of course Wall Street was closed on Monday for Labor Day, but elsewhere in Europe stocks were higher on anticipation that the U.S. jobs numbers and other factors could mean the Fed starts tapering later rather than sooner. A very broad index of European equities, the Stoxx 600, back right about where it was at its most recent high last month. What's the story in the global markets?
Yes, if you look at the U.S. labor market news, the employment numbers came in at much below the expectation, 250,000 or so, which is 1/3 of 250,000, which is about 1/3 of what was expected. And because of this, people are saying that the tapering might be delayed, and that interest rate hike might not be coming in anytime soon. And therefore, the liquidity condition of the overall market should be quite ample, and therefore, people are quite positive about the equity market. European equity market, while U.S. was closed, was up about 1% on Monday, and also continues to move up quite nicely even today. If you look at the German's economic numbers are coming in at better than expected, where the factory orders rose by 3.4% in July, following the 4.6% increase in June, beating the market expectation of 1% decline. All in all, we think that the overall market condition is quite positive in that the economy is moving quite nicely in terms of the recovery, while the overall boosting measures should be continue to come through from China as well as Japan, and while also U.S. tapering issue would be a bit delayed, and particularly for interest rate hike, we're not going to see that happening anytime near soon. So therefore, we are in a very nice Goldilocks era where we think that the equity market in general should go further up higher in the future.
Well, staying in Europe for a minute, the European Central Bank will be meeting on Thursday to decide what to do with its own stimulus program and when to start tapering. A lot of investors watching the ECB this week. Tell us about that and what you're expecting from this meeting.
Right. I think that we have to really compare what is the balance sheet of the ECB versus the U.S. If you look at the central bank's balance sheets, if you look at Japan, it's about 135% of GDP. And ECB, it's about 80% of GDP. As for the U.S., it's only about 40%. So clearly, it's right in the middle, but nevertheless, it is quite a big size. So people are concerned about continuing this kind of measures would mean that the interest rate environment of Europe would be exactly the same as what has been for Japan. And Japan's balance sheet has blossomed to 135%. Right now, the ECB is about 80%. If then U.S. decides to stop the tapering, then what happens is that the dollar strengthening could happen quite aggressively, and that could be quite negative news for most of the other economies. So therefore, it's quite uncertain in terms of how they're going to approach this tapering for Europe as well. I think that they have to do this somewhat, that the size of the purchasing is quite large. It's about 80 billion euros, and that is expected to go down to about 60 billion euros. Even that, still the balance sheet of the ECB is very large. But everybody's saying that Europe suffered 20 years or plus of the very low inflation environment, and if they cut this size of the bond purchasing, it might really result into another disinflation era, and that could be a concern. So all in all, we think that we have to watch and see how ECB does their monetary policy. But I think that the trend is expected to be where, with the economy recovering, the size should be reduced quite gradually.
Right. Well, today, Korean stocks down a little bit. Local retail investors back to buying, foreigners and institutions selling. Big names like Samsung, SK Hynix, Naver among those lower today. Tell us about the domestic market.
Right. The Kospi was down by about 0.5%. Kosdaq was slightly up by 0.14%. And the reason for this kind of volatility is because tomorrow is the quadruple witching day, where everybody's been kind of playing the short selling plays since the August. If you look at the volatility of Kospi, have been very volatile. I think that the foreigners have been net selling quite significantly, and that has resulted into the volatilities, and they're going to play it out until this closing of the futures and options market for September. But after that, we think that the market is very good position to rise. If you look at the Chinese market, the overall Shanghai index is going up quite nicely. Shenzhen index is also up quite nicely in 2 days. The stimulus plan is coming through, and also Japan is talking about stimulus plan as well. All in all, I think that Korea is in a quite good position where the overall earnings numbers are looking good and economic numbers are looking good. Only concern that is because of the rate hike that we did see from the BOK. But I guess people can look at that as a positive indicator where foreign investors could come back to Korea in a quite aggressive fold, given the fact that the rates are higher. So all being said, I think that it's volatility. What we're seeing right now in Korean market is very short term, is expected to be lived in short term. Probably in the future, after this futures close, options are closed, the market should further go up in the future.
Well, we'll look forward to discussing that later in the week, Mr. Yu. And finally, data showing Korea posted a current account surplus in July for a 15th month in a row. That's since the start of the pandemic. Basically, the deficit posted the last deficit was right when the pandemic started. So we're back in the black in July by about $8.2 billion. What's behind that surplus, and what do you make of the economy in general?
Yes, as I said, Korean economy is doing quite well. And that is showing in the export numbers. If you look at the export, it was up 34.9% year on year to 53.93 billion in August, was slightly less than the market consensus of 35.7% rise. But nevertheless, it continues to show a very strong number. And this was the 10th straight month of expansion in sales amid robust foreign demand in the wake of the COVID-19 pandemic. Now, if you look at the export segment, semiconductors, petrochemicals, and cars jumped 43%, 81.5%, and 16.9% respectively. And clearly, that is the main driver for the export. But in addition to that, the shipment grew for wireless devices, the biohealth product, and secondary batteries, and shipment rose to China, U.S., Japan, and EU, and Asian countries. All in all, it seems that the Korean products are in major demand. And with this, we did see current account surplus widen to 8.21 billion in July. And all in all, this is quite positive news. We think that this kind of trend should continue as the demand for the electric cars and the battery continues to rise, and also the other economic sensitive segment also. Also on top of that, the semiconductor business would continue to do quite well. All in all, this means that the Korean won depreciation trend is not going to be continuing. We did see the Korean won falling from 1180 to about 1150. Now it's back up, slightly up again to 1157 because of the foreign net selling in the equity market. But after the futures and options closing, we think that the currency would probably nicely move into more of a appreciation period, and that we do expect the Korean won to appreciate to as low as 1130 probably over the next few months.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights with us as always. We appreciate it.
Thank you very much.